You ever look at your portfolio and think, I'm doing everything right, but I'm still not winning? That's because the market doesn't reward safe. It rewards smart risk. And if you're not putting calculated bets on the table, if you're only holding broad ETFs or playing it safe, you're likely missing out on the biggest opportunities of the next decade. When it comes to investors, they come in all shapes and sizes. Growth investors, dividend investors, well-balanced investors. But if you're the kind of person who says, I don't want to be that involved, I want a hands-off portfolio, then yes, ETFs and index funds are for you. But if you're looking for higher growth, if you want the chance to outperform the market, then you need to be in the game with individual stocks. Yes, they come with higher risk. But they also give you a shot at higher reward. Just look at the Magnificent Seven compared to the S&P 500. Over the past 5 years, the S&P 500 gained 123%, an average annual gain of around 17%. But the Mag 7? Nvidia, plus 1,500%, Tesla, plus 540%, Meta, plus 200%, Apple, plus 183%, Microsoft, plus 160%, Alphabet, plus 140%, Amazon, plus 70%. Only Amazon trailed the S&P over that period. So yes, individual stocks bring risk, but also massive opportunity, when you pick the right ones. And today, I'm doing something different. I'm giving you 4 stocks I believe have huge upside over the next 3 years. I'll break down current valuations, plug them into my reverse discounted cash flow model, and give you precise 3-year price targets. Not guesses, not hype, real numbers based on real analysis. So hit that like button, subscribe, and let's jump right in. Hey everyone, Ernest here. I'm ACA and MBA, but I'm not a financial advisor. What I share today is based on my personal research, investing experience, and risk profile. Always do your own due diligence. Although I take a balanced approach, I have a strong love for dividend stocks. My long-term goal is to generate $100,000 in annual dividend income before retirement. And for tracking my progress and analytics, I use Snowball Analytics. Highly recommend checking that out. Number 1. Uber, ticker. Uber, if you've been in my Discord, you know I've been pounding the table on Uber since it was in the $70 range. And I said back then, this stock will have a 9 handle in front of it sooner than people think. Well, it hit. Market cap, $188 billion, 5-year return, plus 173%, 2025 YTD, plus 50%, top 10 performer in S&P. But I think Uber is just getting started. Positive FCF since 2022, TTM free cash flow, $8 billion, FCF margin, 17% plus, that means more revenue is turning into real profit. Real cash. That's a game changer for any business, but especially a former cash-burning tech company. Estimates. FCF growth, 15% multiple. 30x FCF 3-year price target, $146 per share upside. 60% Number 2. Alphabet, ticker. Google, Alphabet looks absurdly cheap relative to its results. Yes, there are risks. Ongoing DOJ antitrust lawsuit targeting Chrome. Concerns around how search might be disrupted. But in my opinion? Overblown. Market cap, $2 trillion, 5-year return, plus 140%, 2025 YTD, 12%. Underperforming, still. Alphabet is a cash machine, TTM free cash flow, $75 billion, FCF margin, 20% plus. CapEx ballooned to $60 billion, most of it AI-related. FCF growth was 5%, but would have been 35% without that CapEx ramp. Estimates. FCF growth, 15%, multiple, 30x FCF, 3-year price target, $270 per share upside, 60%. Number 3. AMD, ticker. AMD, I've had a love-hate relationship with AMD, but it's turning a corner. They just landed a $10 billion AI infrastructure deal with Saudi Arabia. No revenue yet, but it's in the pipeline. Market cap: $186 billion, 5-year return, plus 115%, past month, plus 30%, 2025 YTD, 3%, TTM-FCF, $2.75 billion, margins, 10%, trending up, goal. Reclaim 2022 highs of 20% margin estimates. FCF growth, 20% multiple, 50x, discounted versus Nvidia, 3-year price target, $173 per share upside, 50% stock. Number 4. Salesforce, ticker CRM. If you ask me, which stock am I most excited about? It's Salesforce, hands down. I is going through phases. First phase was infrastructure. Next up, software. And Salesforce is perfectly positioned for that phase. Market cap: $279 billion, 5-year return, plus 70%, 2025 YTD, 13%. This is the moment to buy early into the software-led AI boom. TTM-FCF, $12.4 billion, margins, 30% plus, up from 20% just 2 years ago, growth. Consistent double-digit FCF growth estimates. FCF growth, 15% multiple, 28x, below 10-year average, 3-year price target, $518 per share upside, 75%. So there you have it. Uber, $146 to 60% upside. Alphabet, $270 to 60% upside. AMD, $173 to 50% upside. Salesforce, $518 to 75% upside. None of this is a buy now call. But these are high conviction ideas with real upside over the next 3 years. Smart investing isn't about chasing hype. It's about getting great businesses at great valuations, and giving them time. Let me know in the comments, which of these 4 do you think will outperform the rest? If you found this valuable, hit that like button, subscribe, and I'll catch you in the next one. Take care, and keep investing smart.